In an interview aboard an Airbus A330 this past weekend, wearing a hoodie with the words French tech stamped on his chest, French President Emmanuel Macron waxed poetic about strategic autonomy. He was speaking to a trio of reporters, and his comments on China and Taiwan would later give allies in Europe and the United States heartburn. Now, buried in that interview, however, was this nugget, according to Politico. Europe should reduce dependence on the extraterritoriality of the US dollar. The issue is that Macron is far from being the only world leader toying with this idea. So will we see a trend of declining US dollar dominance, and what does this mean for crypto? Macron was of course referring to US dollar dominance, and it's a sore point even for US allies. Because after all, US dollar dominance allows the United States to borrow money at lower costs, and it amplifies the power of its sanctions. Among other things, crypto proponents hope the technology will help to create a neutral reserve currency, one that can't be used as a weapon by any superpower. Today, we're going to do a deep dive on a couple of interesting developments on this front, starting with the dollar dominance. So what exactly does dollar dominance mean? Just as English is the world's lingua franca, you could argue that the US dollar is basically the currency of planet Earth, the one that Mexico and Kenya will probably use when they're trading with each other, or Thailand and Hungary, or Uruguay and Kazakhstan, and you get the idea. Also, when countries borrow from international investors, they usually do it by selling dollar-denominated bonds. But there have been several recent attempts to divorce from the dollar. 2 weeks ago, Brazil and China said they would ditch the dollar and begin settling their trades in each other's currencies. China and Malaysia have been throwing around the idea of an Asian monetary fund and reducing their reliance on the dollar. Brazil and Argentina are talking about creating a shared currency, a kind of South American euro that Brazil has proposed calling the SUR. And just last month, the Wall Street Journal reported that Saudi Arabia might accept yuan instead of dollars when selling oil to China. And in February, China's yuan became the most traded currency in Russia, leapfrogging the dollar. And this of course raises the question, is dollar dominance actually diminishing? Maybe, maybe not. But let's take a look at foreign exchange reserves, because the International Monetary Fund tracks this on a quarterly basis. Towards the end of 2020, the share of US dollar reserves held by central banks fell to 59%, its lowest in 25 years, and that's according to the IMF. And it's dropped further since. Dollar-denominated reserves were a hair above 58% in the last quarter of 2022. But when you look at other metrics like the foreign exchange transactions, dollar dominance seems to be growing. And even if the dollar were to fall, that raises another question: what is the alternative? Well, the euro comes in second place currently at 20%, but when you've got a currency run by 27 member countries that can hardly agree on the time of day, one has to wonder what a good candidate to replace the dollar would really be. You might have noticed that China has been striking a lot of deals with countries looking to move away from the dollar. So what about the renminbi? Well, China's closed economic model and its questionable human rights record aren't exactly business friendly. And the renminbi accounted for about 3% of foreign exchange reserves last year, so that's still got a way to go. Enter crypto. See, a couple of years ago, US Senator Rand Paul wondered aloud whether crypto would overtake the dollar. Alex Gladstein, Chief Strategy Officer at the Human Rights Foundation, is convinced that it's only a matter of time before Bitcoin does exactly that. Even the US Federal Reserve suggested the rapid growth of digital currencies, both private sector and official, could reduce reliance on the US dollar. But that's still a pipe dream, because almost no international trade is denominated in crypto today. Just after the start of the Russia-Ukraine war, CNBC reported Russia might accept payments for oil and gas in Bitcoin, but it's not clear to us whether that ever actually happened. The same goes for an FX Street report from September, which said Russia would accept crypto for cross-border payments. Meanwhile, only El Salvador has moved to make a cryptocurrency legal tender: Bitcoin. But that experiment hasn't exactly gone well. As one skeptic snarkily put it, the great thing about actual global reserve currencies is that they don't need endorsements from celebrities. Though some have tried to attribute Bitcoin's recent surge to the banking crisis and a rush to self-custody, it looks more like a whale-fueled rally mixed with a dose of low liquidity. After all, even Ethereum scaling solutions struggle when a couple 100,000 people use them all at once. Imagine what might happen when you onboard the next billion users. So tell us, what would it take to get crypto to replace the dollar? Drop your thoughts in the comments below, and as always, thank you for watching.